Welcome to the Swing Trading with Cycles channel. We're going to do an update on uranium today. It is February 1st, 2023. It is Fed Day, FOMC Day. We've been waiting for this. Just the market needed to hear what the heck does the FOMC have to say. They said their piece. They raised 25 bips. We're going to look at uranium. Now, uranium generally moves in the same direction as risk assets. And we talked about in the previous video, uranium was starting to outperform the S&P. Let's actually just look at CCJ as a proxy. We know it had that big waterfall decline, so that didn't help. Like here, right here, you can see that, like on the weekly chart, that big green bar. So this is a ratio chart. It divides CCJ by the S&P 500 SPY. This is a really important way to look at, basically comparing where you're going to allocate your funds, right? Which is performing better than the other. And you can see here this beautiful low. So the same way you have cycles for absolute charts, it's the same thing for ratio charts, right? Because they trend, right? It's all about the trend. Take a look at the pinned comment. That's going to get you a lot of information. And you can see we really need to break out above this cluster here, right? And again, this is a ratio chart, so it's not talking about absolute prices. But what this is telling you is, and this is a weekly chart, this is showing you that for like many weeks, we were in a massive downtrend, right? Really, this was your period where we just kind of started to stagnate against the S&P, and this is where the wheels really came off. And so you're talking about a period of, my goodness, 478 weeks, if you want to look at it that way. So that's almost 10 years, right? Because 520 weeks would be 10 years, right? So just a massive downtrend. And then look at what we've been doing here. What is this? What are those arrows? Those are higher lows, my friends. That's CCJ starting to outperform the S&P 500 after the COVID bottom. And it's continued, right? And so within that period, we have these downdrafts, right? So like I'll draw in these swing highs as well, right? They happened. Just like we had swing lows, we had swing highs. But they're now, like we've now come through one of those periods, right? We just had a swing high here. We had this big downdraft. So again, during this period, CCJ was massively underperforming the S&P 500. And now we've kind of rallied up. Now you could say, because of this big down move, that this still has a lot to prove. Look at these tiny green candles versus this big red candle. But we're going to see. What we do know is the broader market is rallying now too. And so we could see a situation where this slows down, but we still see some good upside from CCJ. But again, the point here is to see where is a better place to put your money, right? Is it uranium or is it in the broader stock market? And again, since the March 2020 bottom, the trend has been higher, at least for CCJ measured against the S&P. This is just your monthly view of that. Same kind of idea. That's your swing low, that's your swing low, that's your swing low. We were just looking at those on the weekly chart. If you're not looking at monthly charts, if you're not looking at multiple time frames, I should say, you're not seeing the whole picture. And what do we have here? Very, very nascent February candle, because we've obviously only had 3 days of trading, but we're starting to try to make a higher high, right? So this is a swing low here. This candle is a swing low. And so the January candle was a swing low, big close, right? Or I should say, the December candle is a swing low because the February candle went above the high of that candle. Again, take a look at that pinned tweet. That is going to give you a lot of background on this stuff. How to identify swing lows, how to identify swing highs, etc. And so you can see here then that we are potentially starting one of these upswings, right? Like that upswing or that upswing or this upswing or this upswing. And think about the fact that they're all in the context of this bigger pattern, right? Let's see, what does that look like on the 1 year chart? Ooh, oh my God, look how clean that is. So every candle here is 1 year of price action. And you can see when it's green, it means go in terms of for uranium. Obviously, this is a very early candle for 2023, but my God, look what we're on pace to do, folks. That's a big pattern, right? So we break above that level. That means we're starting to make higher highs on the weekly chart, on the yearly chart, Because notice, since that 2020 bottom, we've been making higher highs, higher high in 2021, higher high in 2022. What does this look like it's about to do? So this is telling you that uranium is where you want to be. And this is just looking at versus CCJ. If we looked at URA, like let's say, for instance, versus SPY, so we're not looking at a single sort of issue, it's the same trend. It's a little bit more pronounced with CCJ. So again, you want to kind of pick your battle. You want to kind of pick your bets. If you are going to be in uranium, well, which name is it going to be? That kind of thing. So now let's look at a few of the uranium names, as we do generally. Well, first let's look at the Sprott Uranium ETF. That thing is trying to make new highs on the monthly chart. So last month the high was 12.95, and here we are at 12.97. It's a Wednesday, so we have 2 more days left to trade in the week. What about URA? Show me some new monthly highs. Wait, was that? Wait, sorry. Actually, I think that was a weekly chart. Apologies. The high for last month was 12.99. So we're still not quite above that. That's for Sprott Physical Uranium Trust. For URNM, the high from last month is 37.93. I'll just call these out. For URA, it's 23.64. For CCJ, oh hello, we've already made a new high on the monthly chart. Very, very bullish. 28.24 was a high from last month. So we want to stay above that. Keep that monthly uptrend. Ooh, look at that. So what this is telling you here, I mean, this is just price not wanting to go down. I mean, look at this series of higher lows, right? Like instead of it, and again, there are no guarantees in markets. There's no reason this thing can't still come down here and test this 18 area that we've talked about in previous videos. Like here, looked like we might be heading there. And then we made this lower high here, this high, lower than this high, and looked like, okay, we're going to spill over. Nope. So now we need to, what we really need to do though, you think about it, we got to break above that candle. And now that's annoying because that's a bit of a ways up. So what is that? That's at 31.29. Actually, wait, that's not 31.29, and we're down here at 28.66. But it's not so far from the recent local high at 32.49. Although the all-time high is in the is almost 60, so 56. So now you're starting to talk about if we can break out of this little cluster, do we revisit all-time highs, which I suspect we do. So that's CCJ. Let's look at, what is this? This is Paladin, the OTC version. And for the OTC version, the monthly high for last month is 62 cents. So we still have a little bit of a ways to get up there, but getting close. And also note that these are relatively early in their weekly cycles. Let's see for CCJ. Well, this is actually getting a little bit later now, right? So that is week 25, and so this is week 6, right? So that's not very late, right? In fact, consider that the S&P 500 is in week 15, right? So that's actually a little bit long in the tooth if you think about it. Let's look at that. So that's the weekly chart for the S&P, and right, so we're at week 15. Although again, notice here we have broken above the high from December. This is the S&P 500 chart now, a weekly chart. This was the Fed-induced move lower, and I talked about in real time. This was a massive sell signal. And we did actually get follow through the next week, but like, very muted follow through. I mean, look at how the candle, closed as a doji, right? Refused to really get some big downside like this candle or this candle, right? And then we consolidated that next week, and then we took a trip up. For 5 weeks, we've been trending up. Like, that's very clear, right? This was your higher low, and now we're coming up here, and at some point, we're certainly going to make a higher low. We're already on day 26 here for the S&P. So it's not early in the daily cycle. And we talked about that. This consolidation wasted a lot of time. As I say, it's important to know the trend of like the broader market. Again, you can see the series of higher lows here. So that's helpful. That lets you know uranium has wind at its back. What about Canalaska? Ooh. So Canalaska made a new high above the last month. So that's almost 46 cents. But it's now gone red on the month because of this big pullback today. So we're going to have to watch that. That might be setting up, like worst case scenario, this would be setting up for a bearish outside candle to make a new low below last month's low. So this is probably, of the uranium names, there's no reason for you to be in one that's underperforming. And this is also week 5. Like you can see, that's week 1, 2, 3, 4, 5. And this is setting up for a best case scenario and inside week next week, right? That will open inside the range of this week. Now we still have 2 days to trade, so anything could kind of happen. We can make a new low or a new high and already break out of the range this week. But that's kind of setting the table for you. What else do we have here? GoVX. So you can see these 3 are underperforming. So GoVX Oof, that's ugly. Look at that. That's a lower high. These are a series of lower highs in the daily chart. So if you're thinking about something that's underperforming, it's GoviX, big time. And notice the other ones are pressing. Some of them have already made new highs on the monthly chart, or they're at least getting close to pressing up against those levels. In this case, this one is actually still an inside month. So the high from last month is, what is that? 19 cents. And we're just an inside month and we're red. Not good. This is one you stay away from. You also probably want to stay away from base load energy. Look at that big doji on the weekly. So it just went red. And again, we still have 2 days to trade. So we're red on the month, still haven't made a new high. So again, that just shows you the ones that you want to kind of stay away from. Last month's high is 40, just about 49 cents. So base load energy, GoviX, Lightbridge energy, Lightbridge, yeah, also red for the week. Not quite red for the month yet, but massively inside, and you had this big upper wick. There's a lot of sell pressure on this one. I would stay away. So you can kind of see, I'll actually mark those in red for your visual. Was Canalaska? Yeah, that was also stay away from. What else? Mega Uranium. This is looking better, right? Like this is different, right? Like you can see, this is a green candle now. That's helpful. The high is at 19 cents just about for last month, so you really want to break above that level. And we're here on week 1, 2, 3, 4, 5, 6, and that breaking above that monthly level would be breaking above this weekly level as well. That's your kind of multiple time frame analysis. Also important, I'll actually go back to CCJ because that is our reference point generally. Where are we in the daily cycle? Because we want to be cognizant of that. Are we getting long in the tooth? And yes, we are. So this is, wow, this is already day 28. Wow, that's actually pretty late. Because sometimes you get these like short cycles that are maybe 25 days themselves. So like the fact that the rally has lasted 28 days means we're like, that's bullish. That means we're having a very long advancing phase. But it also tells you maybe not the place to chase here, right? And you can see that's our 10-day moving average, that blue line. At some point, we're going to check back to it, close below it, like this, where we close below it here. But man, you can see, right, like this topped out on day 13. But these were bearish phases, right? In this case, we had a rally that went to day 26. And again, we're here on day 28. This rally went 28 days exactly. So we have a precedent for that, right? And what was the gain on this bad boy? Ooh, nice. That was 55%. I guess how much have we rallied so far? We've already rallied about 36%. So that kind of gives you a sense. Precedent. We had this nice clean rally for 55% in 28 days. We've only gotten to 36%. There's no reason why we couldn't retest these highs in this daily cycle before pulling back. Again, knowing the broader market is also ripping, that would be a 47% gain, so almost 50% up here. So that wouldn't be surprising, would not be out of character by any means. What else? Oh yeah, let's look at energy fuel. So this is looking awesome, this weekly candle. Could be better. Not the strongest, but not necessarily something you need to stay away from outright. I mean, again, like this weekly move started out pretty feeble. I mean, these 4 weeks, nothing to write home about, but this has started to kind of make up for it. Similar to another name we discussed earlier, this is probably going to open as an inside week, so inside the range of this candle here that we're setting up here. And on the monthly, how are we looking? So pretty still inside. Last month's high is at 780. So that kind of gives you a sense of the levels that you want to look for. This is Denison. I mentioned in the last video, this thing is waking up, and that's nice to see it here at $1.50. Last time I was looking at this thing was $1.43. So it's getting there, and it's funny. You have to, depending on your broker, you have to sign a penny stock agreement to buy this thing, right? So it just kind of tells you the kind of respect this thing is getting. And it'll be interesting to see, right? What is the market cap on this bad boy? So it's already 1.2 billion basically. So it's not tiny, right? You have things that are under 100 billion easily. Or excuse me, things that are under 100 billion easily, and even easily smaller than that. But it does look like this cluster here is starting to break out. Now we do need to get above the level that here and here. You see those wicks, that's resistance, my friends. That's $1.52. So we're already right in the zone. And I talked about this in the previous video. A move above there could easily get you to $1.86, and maybe that's where we get like our pullback. Although we obviously need to eventually break above 214 really to kind of get the party started. And then you could put all-time highs back on the table, although we probably get a sizable pullback around $4. So you could have a double up event pretty easily once we get through $2. Not to mention, pretty massive upside in terms of like from where we are already here, right? From $1.50 to $2, 30% up. So this is one of my favorite ones now, and it's been a long time since it's been a long time since it's done anything to do that to earn that kind of credit, right? And so 1, 2, 3, 4, 5, 6, 7. It is week 8, so it's not early in the weekly cycle by any means. Week 8 isn't early, but it's not super late, right? We could still get a nice sizable rally from here, but I mean, again, you can kind of see on this chart, like last time we had a nice convincing rally, we got massive downside. So what we want to see is when we start to get a pullback here, that it's not this like huge momentum lower, right? Or if it is, that it gets reversed kind of almost immediately. But this is looking very promising. Where are we in the daily cycle though? That's, again, I think these things might be stretched in terms of how long they've rallied on the daily time frame. So this thing has a high on day 36. I mean, you could argue that becomes your short-term low there on day 29. Yeah, actually. So this thing could, you could argue this thing is in the new weekly cycle or new daily cycle. It's day 9 with a high on day 6 so far. That's actually really interesting, right? Like this is your cool off, right? You make this, you have this consolidation, this massive move up for 3 days, consolidate a little bit, move lower, close below the 10-day moving average, and then rocket ship up. So that, again, makes this one a really favorable one. Denison Mines. Let's look at UEC. So this thing is firmly above $4, which is good to see. That was a level of resistance. Although we're seeing these big upper wicks, not super inviting, I guess I'll say. And we're basically just still inside the range from this candle on Monday, January 30th, to start this week. And so we're going to need to get outside this range. It goes all the way up to 428 and is below 391. You can see like this wick below. So some kind of wick below and then a recover would be a great kind of entry. Obviously, it may not give that chance, right? Like your next kind of move might just be something like that, right? Where you just press up against that level immediately. So we're going to have to see. And what's the monthly look like on this bad boy? So it is green. The high from last month is $4.28. So not a surprise, right? That makes sense. So we made the high of the month on the last day of the month on January 30th. Interesting. If we think about the weekly cycle, I expected this thing to roll over early. Obviously, the sector has changed completely. We're now seeing higher highs on monthly charts. That's a big signal. So that was week 4 where we had a top. So this is now week 5. We made a lower low. We had a swing high, but then we recovered that swing high, my friends. So this is week 5. This is week 6. This is week 7. So week 7 so far, and no swing high yet, right? So you can almost say like these things are like getting towards the midway point of the cycle, and you can just again see like past rallies. This thing has rallied like 16 weeks. It's rallied like 11 weeks. It's rallied like 8 weeks. So we could easily have several more weeks of rally here and nice little upside. Maybe come and kind of test this level here at that. What is that? Around that 465 area, which was our original target when we talked about previous trade. Yellow cake uranium. How are we looking? So this one is looking a little bit weaker. It was red today, and in terms of where we are in the daily cycle, we're threatening for that to. I doubt that that's your daily cycle high, but that is day 26, so that is possible, right? But similar to that other name, maybe this was your short little cycle, clean things out, and this is actually a new one. That was Denison, so that's interesting. Denison might be kind of helping us to signal, maybe kind of signaling something here. And the monthly level is 425.80. Elevate uranium monthly level 48 cents. This is looking nice. Higher highs on the weekly chart. Uroy is another one we talked about. Living inside this consolidation box, and it's going to need to get out. But first step is making a new high on the monthly chart, and that's going above 297. That's the level you want to look for. We're at week 6 of the weekly cycle. And again, you're starting to see a credible idea, that this was a weekly, like this, for this particular name, that definitely looks like it's a daily cycle low here, right? That this whole thing is a cycle. This is a relatively shallow decline. It got pretty close to giving back a lot of the rally. So you could say this is in a new daily cycle. So day 1, 2, 3, 4, 5, 6, 7, 8. So you could say they're all like in the 8-day neighborhood. So that's helpful to you as well, because if we're in day 8 of a daily cycle, it gives us more room to rally on the daily cycle, which gives us more room to rally in the weekly cycle at the end of the day. They're all connected. It's all the same price action. That's why multiple time frame analysis is so critical. And NexGen Energy, this is looking a little bit not the strongest with all this upper wick here. Not awesome. But the monthly level we want to be watching for is the high from last month, $5.11. Kazatomprom, we talked about this one signaling potentially a new long-term cycle in place. And man, look at this massive downside after this swing high, right? So last video, we called this swing high on day 20. And since then, we had a massive move lower. And what this is telling me is that may have just been your daily cycle low, right? Like we had a cycle from, this is your rally, right? Like you have this rally period, and then this relatively short decline in terms of time. What is that? 1, 2, 3, 4, 5 days. And now we have a swing low. That's how we know we may have a daily cycle low. You can't have a daily cycle low, or any cycle low for that matter, without a swing low. And that's our swing low. Once we went above the low from yesterday, which marks the low, so that is above $30.88. And you can see we closed here at $31.78. So, meaningfully above that. So that's your really positive signal for the uranium sector that Kazatomprom is showing you here. And you can see what it did to the weekly chart, right? This was at one point a red candle that had made a lower low. And now it's a bullish hammer trying to make a higher high above this weekly high at 33.88. Very positive signals here. And again, we talked about in that previous video, and you can always take a look at the link in the description. This is month 9, and you can see a world where we push higher into maybe even month 14. So another 4 or 5 months of upside easily. BHP, this one definitely is diversified. It does a lot more than just uranium. And you can see, yikes, this is the weekly chart. This is a massive sell signal, this shooter on the weekly level, targeting let's say here and then potentially there. So that bears watching. And again, that's not limited to a uranium. We looked at Paladin already, but we looked at the OTC version. FCCUF, this is fission uranium, not to be confused with fission 3.0, which we will actually review last. That's an interesting story. So this one here, right? So that's an interesting case where it looks like we're still in the same daily cycle. It's day 21. So they don't always move completely together. And you can see on the monthly level, the high we need to get above is 70 cents even. That's fission uranium. And now fission 3.0, we've been kind of stalking this one, waiting for the daily cycle low. So we had a daily cycle high day 18. So this is day 19, 20, 21, 22, 23, 24, 25, 26, 27. So this was potentially a daily cycle low, but now this looks like it's threatening to make a lower low. Remember, this thing has already moved 300%, so it's kind of catching its breath up here. But this is going to be the opportunity to get in for the next big leg higher. But be mindful, we may have a weekly cycle decline brewing, because that was week 11. So this is one where you want to try to catch the next ride up, but you also don't want to be kind of trapped in it while it's consolidating and maybe kind of pulling back. So patience is important. I'll continue to kind of report on this one on Twitter for sure, watching it pretty closely. And I'm just going to throw an alert on there in case we break below that. That tells me, okay, weekly cycle decline has started, most likely. And that's the last name that we had to review. And so again, to reiterate, the broader market is breaking out. People were very bearish, expecting the Fed meeting to crash the markets. It's done the opposite. Now we know these things can reverse overnight, the next day or even the day after. but so far it's been a very bullish reaction. The Facebook earnings were received well. So risk assets are rallying. And again, as we look at in that ratio chart, uranium is crushing it. Let's look at DNN versus SPY, actually, just for just for the heck of it, right? So you can see same pattern as CCJ, right? Like we made this low here and now we're rallying. And also notice this low is higher than this low, right? So it's a nice higher low, like right there. Boom, boom. That's bullish, right? This little penny stock, very, very bullish. So we'll leave it at that. Thanks for watching.